What's up everybody? Welcome to the Stocks channel. My name is Cory and welcome to your daily stock market technical analysis update. We saw the S&P 500 break to new all-time highs today and the market is still looking extremely bullish. Before we get into the charts, please help me out by smashing that like button. And if you're new, go ahead and subscribe so you can follow along with all my daily updates. First up, we'll look at the S&P 500. So let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, so looking at a daily chart of the SPX, we see the S&P 500 did get a daily close to a brand new all-time high. This is pretty significant because, as we were saying, this trend line was calling critical market tops, and ever since we've broken out or got to this trend line, we found significant resistance. So breaking to a new all-time high is always a bullish sign, and we now have higher highs and higher lows on the daily chart. So higher lows and higher highs are always going to be a bullish sign, and we still have bullish trending and bullish price action. So this is absolutely a bullish market, and it is an opportunity to buy the dip and continue to go long because the trend is our friend and it's in our favor, and right now the trend is very bullish. So we do have our updated bear bull survey, and you can see that there is extreme bullishness because our bullish average is now 55.8%. Historical average is only 38%, so we are getting to that extreme bullishness, and as we get more bullishness, we could be getting closer and closer to an important market top. But this is an extreme bullish market, and we still do have cash on the sidelines. So who knows how high this bullish percent is going to go up. But when we're breaking to new all-time highs and people are making money and everybody's feeling good, the market could continue to melt up and we could see extreme euphoria. So let's go back to the SPY ETF, and we can see we closed above both trend lines and closed above to a brand new all-time high today. We're still getting bullish price action above that 5 EMA, and the trend for the bulls is only picking up momentum. The 20 simple moving average and the 50 EMA are still sloping upward, and that 5 EMA is basically still going up in that straight line. So it looks like the bulls only needed this one day of cool off, and then they're heading higher and forming new all-time highs. So as I always say on this channel, I don't suggest you FOMO into the market, and just because we form new all-time highs, if you're not already in this market, you should not be buying at all-time highs. Wait for the dip buying opportunity. So remember, I've been talking about false breakouts, and we do have breakouts from our trend lines and to our resistance all-time high. So now that we have this breakout, you really want to wait until we get a test of these resistance levels and see if they act as support and we get that bounce. On that bounce, that's the opportunity to start buying and start accumulating for the next bull market. Remember, anything above these trend lines is a new bull market because this trend line has been calling the top going all the way back to 1987. The purple trend line goes to 87 in 2000, and the magenta trend line goes all the way back to 2009 to the high of 2018. So these are trend lines decades in the making, and they're not something that I would just ignore. Breaking above them twice now is a bullish sign, and it's only a matter of time before the bulls break above them for good. So wait for that test of resistance as support and wait for that confirmation bounce, and that could be the opportunity to start going long on the market. Now let's jump over and look at the Nasdaq 100, and this is the QQQ ETF, and we see the Nasdaq already had that pretty significant dip, and we're starting to get that bounce from the lows. So if the Nasdaq has already cooled off and it's starting to bounce, that could be the sign that S&P 500 is going to continue to melt up. The QQQs did close right around this resistance level today, but it's still looking bullish, and we're still coming from significant lows where we almost got a 0.618 Fibonacci retracement and then bounced. So it's possible that the tech bulls and the Nasdaq 100 bulls are about to break out of these resistance levels and also form new all-time highs. So we still have this resistance trend line somewhere around $291. We have the previous daily high at $294, which would be a resistance level. And if we break that, we're heading to our price targets at $300. And if we break 300, our next price target is all the way up at $312. So we do have significant upside price targets on the Nasdaq 100 QQQ ETF. And if technology is going to start strengthening and we're going to start breaking through these resistance levels, it's likely S&P 500 is also going to continue going higher. So we have bullish price action and bullish trending all around in the stock market right now. And as long as everything's bullish, there's no reason to try to short or call a top and be a bear right now. Don't go against the trend. If you don't like the price action and you don't like the trend, you're better off just staying in cash. Next up is the DOW Jones Industrial DIA ETF, and we see the Dow Jones tried to break through to a new all-time high today, but did get rejected. The Dow did find resistance at the previous all-time high and did close below. So no new all-time high on a closing price for the Dow, but the price action is still bullish and the trend is still very bullish and very strong. Now the Dow does have a huge gap below, which won't close to a price target of about $284, which is also going to be that 0.382 Fibonacci retracement level. So be patient on the Dow. There's no reason to rush into it. And even if we do get a breakout, don't forget we need that breakout as a test of support and then a bounce before we know it's the real deal bull market. So we are seeing some breakouts on the S&P 500, but the Dow and the Nasdaq 100 are not quite there yet. When we do start going into that next bull market, we're going to see all three indices making new all-time highs and starting to head higher. It should not just be the S&P 500. So we're not quite there yet, but we are getting very close. Next up is the VIX, which is our fear indicator, and the VIX is still bleeding out, closing down over -8% today. So that's what's to be expected when the market's heading higher. We're going to see the VIX continue to bleed out and head lower. Remember, a low VIX means low fear, and people are getting less and less scared of this market the more bullish they become. So the VIX is aligning with the bullish sentiment that we're seeing in the market. So we expect to see the VIX continue to head lower as the market heads higher. The VIX is trading below our support level at 24.8, which could now be a resistance level for the VIX. Don't forget, going all the way back to the March crash, we still have a gap open on the VIX all the way down at 18.4. So it's likely the VIX is heading lower, and it's ready for the stock market to continue to head higher. Next up is Amazon stock, and Amazon is trading between a consolidation wedge from a resistance trend line and a support trend line. Amazon did get a bounce off of the support trend line for 3 times now, and it's currently trying to break through all of the moving averages. So don't forget, when the price action gets below the moving averages, those are resistance levels, and we see Amazon struggling to break through the 5 EMA. It still has time on the clock to break above there, and if we can break above and close above the 20 simple moving average, it's likely that Amazon stock is heading back to that $3,400 resistance trendline level. Next up is Apple stock, and Apple already broke out of its resistance trendline and it's continuing to head higher. The price action's bullish, closing above the 5 EMA, and all of the moving averages are stacked to the bullish momentum trend side. So Apple's looking good, and Apple is that market moving stock. So if Apple continues to head higher, expect the rest of the stock market to continue to head higher as well. Apple could be the momentum for the triple Qs to break to new all-time highs, and as long as Apple's in a bullish trend, the rest of the stock market is also going to remain bullish. Next up is Tesla stock, and the bulls are still on vacation. They must be having a great time and don't want to come back. The price action is barely holding up above the 50 EMA, and the moving averages are starting to pick up some bearish trending. So Tesla's not looking great, but it is still somewhat in a consolidation here, and we could see a break to the upside or the downside. Right now, with the price action holding up above the 50 EMA, that is slightly bullish, but there's really no momentum here. It's likely a lot of the Tesla bulls have left and they're off chasing the Chinese electric vehicle stocks, and they could come back soon. But right now, we don't want to guess which direction Tesla's going to break, and it could break to the upside or the downside. So you just need to be patient and watch that 50 EMA. Next up is NVDA stock, and NVIDIA has already been bouncing off of its support trend line, and it is looking like it's still closing below the 20 simple moving average, but it did test the 50 EMA and did get a bounce. So there is good news in NVIDIA holding above its support trend line, and if it can continue to close above the moving averages, it's likely heading back up to $570 and making another attempt at a new all-time high. Remember, when NVIDIA breaks above 570, we want to see that level get tested as support and that bounce, and it's likely NVIDIA is going back into that long-term bull market. Next up is Boeing stock, and Boeing is still holding up above its 5 EMA, and it's still trading above that 200 simple moving average. So right now, Boeing has bullish trending and bullish price action, and it's looking good for the Boeing bulls. The best thing Boeing can do is consolidate around in this area and show that this was the real deal breakout. The longer Boeing can stay above the 5 EMA and the 200 simple moving average, the stronger the bull case becomes. Next up is the US dollar, and the dollar is still heading lower, and it did get rejected at that 20 simple moving average. The trend is still bearish, and all the moving averages are stacked to the bear side. So a weak dollar should be a strong stock market, which means we're likely going to continue in this bull market that we're seeing in the stock market. Next up is gold, and it's still holding up above that 1860 support, and we did get that confirmation bounce. We also got some bullish price action today because we closed above the 5 EMA. So gold's looking good, and it looks like it's trying to close back above its 20 simple moving average and reclaim its bullish trend. We're getting bullish price action on gold, so we just need confirmation of the trend going back to the bull side and make another attempt at that 1930 resistance level. Silver's looking very similar, holding up above its support trend line, and we finally did get a breakout of that consolidation where the price action was moving right around all of the moving averages, and we finally got a bullish price action close above all of the moving averages and the support. So silver's looking great, and we want to see silver come out and break above previous resistance at $25. Next up is Bitcoin, and the Bitcoin bulls are still holding the price action above the 5 EMA, and we still have that very strong bullish trend going on. Don't forget our price target on Bitcoin is $17,000, and I think once we get up to 17,000, we could start to finally see a pullback in Bitcoin. So I don't think this is the greatest time to start buying Bitcoin, but it is good for the bulls that have been buying, and they're rewarded for buying low. But I wouldn't chase it, and I wouldn't FOMO in right now. Wait to see when we get to our price target what the price action does, because it's likely that we're due for a cool off and a consolidation period after we've gone this far this fast. So a quick look at the sectors. The financials are looking good. They still have bullish price action and bullish trending. The industrials looking good, bullish price action, bullish trending. And the healthcare sector is looking great with bullish price action and bullish trending. So all the sectors are looking great, and if technology can start picking up the momentum and heading higher, the S&P 500 is just going to continue melting higher. So to summarize, going back into the S&P 500, it should be no surprise that we're seeing this strength because we're seeing bullish price action and bullish trending all around in the stock market. All of the sectors are looking great, and the weakest sector right now was one of the strongest sectors, which was technology. So technology is eventually going to step back in and showing strength, and I do expect to see the tech sector lead the way on the next bull market. So the S&P 500 is going to only continue to melt higher when technology goes back into a bull market and starts breaking to new all-time highs. The Dow is going to be right behind, forming new all-time highs as well, and the S&P 500 is just going to continue to head higher. Eventually, we will get that extreme bullishness, and the put-call ratios will get extreme, and we probably will see a significant pullback. But it's likely that the melt-up scenario is going to continue on for at least a few more days going into next week, and we're going to continue to see higher prices. So like I said earlier, if you're not sure what to do, you're better off just staying in cash. And if you're looking for a trading community, don't forget about the Stocks Channel Discord, and you can find a link in the description below on how you can join. So please remember to help me out by smashing that like button, and if you're new, go ahead and smash that subscribe button so you can follow along with all of my daily updates. Thanks for watching, everybody. Have a great weekend, and as always, I will see you in the next episode.